Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh, and over the next 1 hour, me and Priyanka Uppal will take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, let's take a look at the handover that we have coming in from Wall Street. And when you take a look at the US markets, largely what you're looking at right now, of course, we've had quite the move when it comes to the US markets, but that we've had to sort of take a look at. But when you take a look at Dow Jones, you did see that scaling that 43,000 levels for the first time. Of course, it was a tech-led gains that we've largely seen coming in. So when you take a look at the futures, though, little change, not much of a move coming there. But then when you take a look at the winning day, of course, you did have the S&P 500 as well as the Dow managing to eke out those intraday highs. Record closes is what you saw coming in. Like I said, 43,000 mark for the first time for the Dow as well, and the S&P 500 as well did quite well for itself as well. When you take a look at the information technology stocks, the tech names, like I mentioned, those were the ones that really led this particular rally. When you take a look at the S&P 500 as well, because when you take a look at the sector, that finished 1.4% higher. That was the kind of move that we saw coming in, at least when it comes to the IT stocks. When you take a look at tech, AI darling Nvidia, 2.4% rally is what you have on your hands there as well. So that largely is the kind of handover when it comes to Wall Street. And of course, it's the corporate earnings that will be taking center stage today as well. So you do have Goldman Sachs as well as Citigroup and Bank of America that are all set to report. And beyond banks, of course, you do have United Airlines as well and Johnson & Johnson that are also on the docket. So these are the ones that we'll largely be keeping an eye on, and investors will of course be keeping an eye on economic data as well around manufacturing and consumer expectations. So that largely is the kind of handover that we have on our hands when it comes to at least Wall Street, Priyanka. But when you take a look at US crude oil, quite the fall that we've seen come in there.
Absolutely, morning Shreyansi. In fact, crude oil prices, they fall more than 2%, and this is all after the OPEC has cut the demand forecast again. Now, largely the move of the crude also depends upon the OPEC targets also. Now, when OPEC cuts the demand target, of course, this creates jitter amongst the entire oil ecosystem. Now, the demand forecast has been cut again, and its demand forecast for 2024, and not just for this year, even for 2025, they have cut the demand forecast. And there are signs of slowdown in global economies. This is what has been anticipating, and that's why the reason we've seen that crude had been hovering around 70 levels from many weeks, though it was on a surge that it has surged little, $7 to $8 ever since the Iran and the Israel tension started. But the market meanwhile continues to monitor the Middle East in anticipation of the retaliatory strike by Israel also against Iran. But then major of the cues, Shreyansi, would come from the earnings now. Let's not forget that 30 stocks of S&P which have posted the earnings so far, which has beaten the expectation. So the next big trigger is coming certainly from the earnings right now. But then this one would be a key monitorable to watch out on the move of course, the oil at this moment.
Well, absolutely, yeah. So since we've talked about oil demand, we've just covered all of that. But then let's also switch focus then to US AI darling Nvidia that has scaled a record close as Wall Street gears up for a power-packed earnings season. The shares are now up almost 180% for the year and have soared more than 9-fold since the beginning of 2023. Additionally, the chipmaker's top customers and their AI spending strategies also boosted the stock to higher highs. The company is now worth more than $3.4 trillion, becoming the second most valuable company after Apple at about $3.55 trillion.
All right, meanwhile, let's shift focus to some more important comments that has come in from Fed officials. Now, Federal Reserve Governor Christopher Waller, he has signaled that the central bank's future interest rate cuts will be less aggressive than the big move which came in the month of September. But the Waller expressed concerns over possibility of a hotter than expected economy. We've seen the inflation CPI figure also which came in US last week. Citing recent reports, the policymaker indicated that the data is signaling that the economy may not be slowing as much as desired. Now, meanwhile, Kashkari said more rate cuts likely lie ahead as a 2% inflation target looms into sight.
Alright, then let's shift gears then. And global sales of fully electric and plug-in hybrid vehicles rose by an annual 30.5% in September as China surpassed its record numbers recorded in August, and Europe also resumed growth Data in fact shows that EVs, whether fully electric BEV or plug-in hybrids or PHEVs sold worldwide reached 1.69 million in September. When you take a look at the sales in China as well, you're looking at a jump coming in of about 47.9% in September, and they reached 1.12 million vehicles, while in the United States as well as Canada, they were up 4.3% to about 0.15 million as well. And in Europe, you do have the EV sales rising 4.2% to 0.3 million units as well, and thanks to a 24% jump in the United Kingdom and gains in Italy, Germany and Denmark. That is the kind of move that you're seeing coming in, at least when it comes to the EVs.
Absolutely. Now let's just shift focus back home. Now, India's CPI inflation jumped to a 9-month high of 5.49%. This is as compared to the last year's figure of 3.65% for the month of August. Now, this was driven by resurgence in food price, which rose to 9.24% after 2 months under the 6% mark. Now, rural inflation that has quickened to 5.87% as again 4.16% in the month of August, whereas urban inflation, which rose to more than 5% as compared to 3.4%, which it was in the month of August. Let's get you some more reactions. We did caught up with Indranil Pal, Chief Economist for Yes Bank also, and even with Madan Sabnavis. Let's understand what they are penciling in.
While on one side we say that rains have been good, we also need to factor in what damage a late withdrawal of the southwest monsoon could be doing for certain crops. So that's point number one. The point number two is that if I actually look at the early indicators for the current month, which is October, and which will be getting reflected in the October data that comes out in November, vegetable prices actually are up by around 13.6% on a month-on-month basis already, and edible oil prices are up by around 7.4% already, levels which are higher than in the previous month. So these are some of the factors that we need to factor in, and the next reading could be also closer to a 5.5% or even higher if these are the relevant numbers that we are looking at. And subsequently, for the next month also, we could be looking at inflation on the higher side. And then the base effect, which is actually also pushing up this inflation, reverses, and then we can see a softening.
So this particular number, which we got of 5.5%, which comes over 5% last year. So it means that it's not that it was the low base effect which has led to 5.5%. Prices have been rising, especially in the food basket. So I think the indication is that the Reserve Bank of India will definitely not take any decision on the repo rate in December, because we will be facing these kind of horrendous numbers of about 5%, I think, for one more month, that is for October, according to our calculations. And therefore, the earliest that we could be thinking of a rate cut would be only in the month of February. Now, this said, I think our calculation here of core inflation is that it's more in the region of 3.4, 3.5%. So there is a case of core inflation also creeping up. And there are manufactured goods. I think the personal care segment is something which has been witnessing increasing inflation. And this is more on account of the higher input prices. So I think inflation is getting slightly generalized. I think that could be a kind of a worry. And there will also be this important decision which the government has to take about the fuel prices.
All right, and that was the word coming in from Indranil Pan as well as Madan Sabnavis. Moving on, then let's take a look at what brokerages then had to say about it. And when you take a look at what Morgan Stanley had to say, they're talking about how food inflation is what is driving the upside surprise. And in terms of what else they had to say and the kind of expectations that they then have, they're expecting disinflation in vegetable prices to gather pace. That is something that they're penciling in at this point. In terms of the stance coming in from the RBI, they do expect the RBI to maintain status quo on rates in December policy. So that largely is the kind of commentary that we've seen come out from at least Morgan Stanley.
Because that's the big worry that comes in. If the inflation is not on the as in the desired limit, that would there be a chance that RBI would not cut the rates hike? But then brokerages are believing that there would be a status quo. RBI is expected to cut the rates in the month of December. We stay for a short break here. When we come back, we get you the Asian cues also.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then, and the kind of cues that you have, it's a mixed bag. at least when it comes to Asia, on your screens, you do have a Nikkei gains of about 1.3% coming in for that one. When you take a look at South Korea's Kospi as well, you are seeing a little bit of a tinge of green coming in for that one as well. 0.1% of an uptick coming in for Kospi as well, but not much of an uptick, at least when it comes to Kospi. When you take a look at ASX 200 as well, you're looking at a tinge of green coming in there as well. On your screens, you do have the ASX 200 up about 0.8% as well. Let's also take a look at Hang Seng and Shanghai, because they're the ones that are on the back foot as we speak. So when you take a look at Hang Seng on your screens, downtick of just about 0.1% coming in for that one. When you take a look at Shanghai as well, 0.4% uptick. Downtick rather is what we have on our hands there. So Hang Seng and Shanghai on the back foot, and the other Asian markets are doing quite well for themselves, at least when it comes to Nikkei. You're seeing some gains coming in there, 1.3%. That's the one that's holding up really on a good footing at this point. But of course, back home, we closed around the 25,127 levels. That is where we shut shop yesterday. And currently, we're looking at a good start. So let's see how that really pans out for us, Priyanka.
Absolutely. Let's see GIFT Nifty, what it is indicating, because of course it should mirror the gains, the kind of moves that we've seen in US markets, even the start of the Asia market. Let's see, we should take some good cues, and of course we've seen already a breakout yesterday. Welcome back. You're watching Market Cafe on ET Now. This is Priyanka. And now, big boy Reliance Industries, which delivers an inline set of numbers. Profitability largely led by growth in other income. Both OTC as well as retail segments were muted in this quarter. Let's go across to Somit for the fine print of the numbers. Somit?
Well, if you look at Reliance Industries numbers, they were pretty much in line with what the street was expecting, largely flattish on a sequential basis. If you look at the revenues, they were flat. EBITDA grew by nearly 1%. Margins came in at 16.9%, while the net profit was higher by around 9% on a sequential basis. But that was on the back of higher other income, which jumped nearly 22% on a sequential basis. Now, if you look at segment-wise performance, O2C EBITDA was down around 5%, and this was largely because of the fact that Singapore gross refining margins were flat on a sequential basis, while petrochemical margins also, there was no much of a significant move coming in, and hence the EBITDA was down around 5%. Oil and gas exploration EBITDA, now that increased by around 2%, while the retail EBITDA was higher by around 3%. However, the growth when it comes to retail was kind of muted compared to what we have seen in the past, and that is because of a weak sales coming in from the fashion and the lifestyle segment of Reliance Industries. However, the company has also added that they have witnessed a strong growth in the first 2 weeks of October as festival demand has started to pick up. So that is one positive commentary coming in from the company. Apart from that, if you look at the company's net debt, that was high by around 3.6% on a sequential basis, but the company's leverage, that is net debt to EBITDA, remained largely stable at around 0.66 times. Now, when it comes to Reliance Jio, that was the only segment of Reliance Industries that has reported the highest growth or a strong growth on a sequential basis, and that was purely on the back of a tariff hike that we had seen. Revenues were up by around 7%, EBITDA increased by 8%, margins came in at 53.1%, net profit was higher 14%, but the key number for the company, that is the ARPU number, that was higher 7% on the back of tariff hike. Now, because of tariff hike, the company's ARPU growth was the highest that we have seen in the last 10 quarters. However, on the negative side, if you look at, because of this tariff hike, there was a subscriber churn, and the subscriber decline that we have seen for Reliance Jio in the second quarter was the most in the last 10 quarters. However, the company has also added that the SIM consolidation of the subscriber churn that we had seen in this quarter post the tariff hike was lower compared to what the company had seen a previous time when they had taken a tariff hike. So that's a positive commentary coming in. Apart from that, they also said that they have migrated nearly 31% of the total user base on 5G network, and the offtake for Jio Air Fiber has been pretty much strong with around 2.8 million connected homes, which is nearly double on a sequential basis. To sum it up, the overall numbers are pretty much in line with what the street estimating. Jio Telecom arm led the growth, while oil O2C segment was kind of muted, and retail growth was also kind of muted.
Alright then, so an inline set is what we had on our hands when it comes to Reliance as well as Reliance Jio. In fact, we also caught up with experts Mayuresh Joshi as well as Devin Choksi as well. Let's go across and listen into the word coming in from them as well.
So I think on an average, the fair estimate that comes through is around 200 rupees in terms of ARPU expectations. Obviously, the subscriber drop is a tad bit bigger than what the street had penciled in. But I think it's an adjustment factor. In my opinion, you will see stability in subscriber numbers as we head into the next few quarters as well. With the ARPU increases, what Reliance strategy will be, even on the broadband part, is going to be very, very interesting. And in that aspect, my own sense is that it largely offsets that subscriber loss with the ARPU increase that you'll probably see. But even on the subscriber loss element, as I just mentioned, you should start seeing stability in numbers and not much of churning probably happening as far as the core numbers are concerned.
Well, I think the O2C business is fairly well explained, I believe. I don't think that much to add into that. The geopolitical situation, I think, probably disrupted the entire supply chain movement to a greater extent. And as a result of which, I think the GRM also got affected in the interim period. I think is the root cause of these numbers. I don't think that this is a permanent feature as far as the Reliance's O2C business is concerned. This could be seen as a temporary one. Market fully understands this, and I think it has discounted it also. More or less 10% fall in the stock price, I think, has already explained that part of it. But importantly, I think the Geo numbers looks, pretty impressive to me. I think they are already on a base of around 66,000 crore EBITDA on a yearly basis at this point of time, and probably 1,35,000 crore worth of revenue base in the Geo platform.
All right, so inline set of number, the only segment amongst the entire categories was the Geo, but then we also got some brokerage views on Reliance, and most of them are penciling in that there is a weaker OTC, but the going ahead, the prospects are better. Let's get you one by one. In fact, Novama has given a buy target with a target of 3650. They speak about that the EBITDA beat was there. There was better EBITDA due to the better OTC, ONG, and even the digital segments. And their new energy business could contribute more than 50% of the consolidated PAT by year 2030, which is an estimation they are penciling. Systematic did share a view. They spoke about that it's a weaker OTC business. Retail also dragged the EBITDA this time. Slowdown in retail continued. That's a voice which has been coming in from many brokerages. In fact, not just Systematic, even other brokerages have also spoken about it. But they also expect revival in OTC business and even in retail from the second half of this year, FY25. Digital services, ARPU also, in fact, to keep rising for another 3 quarters to come now. So the downward trend continues in retail. Slower stores addition, this is what a view which is rich brokerages are penciling in. But then picture the situation seems to be getting better by the second half of this year.
Well, absolutely. Yeah, that's the word coming in, at least when brokerage radar is concerned. But let's keep it going with earnings and let's get you some important updates coming in from tech major HCL Tech, because that has kicked off the earnings season with revenue, profit after tax, as well as margin beating all estimates. So beat on all fronts is what we have on our hands when it comes to HCL Tech. Revenue was up almost 3% on a sequential basis at least, and net income on the other hand did decline marginally. The board has also announced a dividend of 12 rupees a share as well. Let's also go across and listen in to the commentary coming in from the management on the earnings as well as the way forward.
There is nothing like bunching of revenue or anything like that. It's like a normal quarter where incrementally the demand was better. So services overall revenue came much higher than what we expected. So that's really good fulfillment of the demand that was coming our way across all the verticals. We shared last quarter that all the verticals will grow sequentially except financial services, which was going to decline because of the State Street JV divestment. But even if you kind of exclude that, financial services has grown the strongest.
In terms of margin walk for this quarter, it improved by 149 BPS. So out of that, 52 BPS improvement was contributed by softer business. Services business improved by 110 basis point, which was largely driven by operating efficiencies, and 24 BPS contribution came in from the favorable exchange movement. In terms of Q3, I think we are confident of delivering a good quarter, but difficult to call out. I would not like to call out the margins for the Q3 because we have given the full year guidance now, which is 18 to 19%, and we would like to stick to that.
There's a slight drop in headcount this quarter, but if you look at the headcount on a year-on-year basis, after normalizing for the divestiture that we reported last quarter, our headcount is still growing. Overall headcount has grown if you look at it on a normalized basis. The campus programs are on. As I keep saying, our plans are generally made for a full year with a review each quarter. So we do make our moderations each quarter based on the demand movements. Into FY26, the cycle that we are recruiting now, I think the focus is more going to be on specialization that we will focus on in campuses, not just go by pure numbers. That's what is going to be the focus, and those plans are getting finalized. It'll be done during this quarter, but the campus program is on.
All right, so beat on the numbers now. Now, brokerages have also given a view on that. Investec, though they have hiked the target price from earlier 13.12 to now 15.40, but that rating is set. They talk about that there is a growth in discretionary, but it comes with many caveats. They talk about that the bottom end of the guidance, though it has narrowed down, there were lower deal wins in H1. Pipeline is near life high. So this is one kind of caveat they're talking about. Now, for FY25 estimated EPS, it is up by 2% post this beat of numbers. This is what Investec is talking about, HCL Tech. Now, Nuvama has also a view on this. They have hiked the target price to 2125. Earlier targets for 2020. The buy rating they've given, and they've spoken about that there's a broad-based growth across the verticals. And in fact, the upgrades in revenue could also maintain the margin guidance. Let's remember that management also is confident of achieving the guidance for FY25. So the valuation premium will sustain, and higher growth and capital allocation will also sustain. Looks like a good set of numbers coming in, and this should actually propel the entire IT sector today, Shreyansi.
Well, absolutely. It's HCL Tech that really makes it to brokerage radar on the back of that beat coming in on all fronts as well. But let's keep it going with earnings then, because HDFC Life is also slated to report Q2 earnings as well later today. Let's go across to Gaurav to see what the street is really penciling in.
HDFC Life, the company has already set a precedent, strong precedent from its monthly updates, because when we look at September's number, there we have seen a growth of around 22% in overall AP, and the individual AP grew almost by 25% on a YY basis. In fact, when we look at the industry data, industry increased in Q2 FY24 almost by 23% or to 24%, while HDFC Life increased their, the growth for HDFC Life was at 28%. Apart from that, when we look at the market share also, HDFC Life has gained market share almost by 60 basis points. And as a result, when we look at the numbers, it seems that investors are being a little optimistic on this stock. What they're expecting is that in terms of AP, they're expecting around 23% growth on a YY basis in Q2 FY25. Other than that, this growth will be driven by ULIP products and other products. And when we talk about some VNB and VNB margins, what they are seeing there is that some ongoing channel investment as well as lower operating leverage can actually weigh in on this VNB margin. But again, they are expecting some kind of expansion. They're expecting expansion of around 8 basis points in VNB margin. And lastly, they will be watchful for FY25 growth guidance if the company is changing these growth guidance and any kind of expectations from the trajectory for second half, because now that the surrender value norms have changed, they will be looking out on any kind of guidance that the company may be changing. But overall, when it comes to Q2 numbers, it seems that investors are being a little optimistic. They are building in a growth of around 23% in AP growth. So definitely watching out on how the numbers pan out for HDFC Life.
Right, so we'll have to wait and watch, though the counter was in momentum yesterday also. Thanks very much, Gaurav, for that update. And now on to the big story then. India and Canada have expelled their top envoys along with other diplomats as the row intensifies over last year's assassination of a 6 separatists on Canadian soil. Now, the Canadian police has accused Indian agents of involvement in homicides, extortion and even violent acts, and targeting supporters of the pro-Khalistan movement, which seeks a separate homeland for Sikhs in India. Delhi, in fact, has rejected the allegation as preposterous, accusing Trudeau of pandering to Canada's large Sikh community for political gain. Let's now go across to Sumita Kharir, who's covering this entire matter. Sumita, what is the latest development on this?
Yes, in fact, the latest development, Priyanka, is the fact that India late last night asked a couple of Canadian diplomats, at least 6 of them, to leave the country by Saturday. And it said that it was investigating the matter. And of course, this was after, the Canadian side said that some diplomats of India in Canada were persons of interest. And remember, like you said, this is after the killing of a Sikh separatist that happened last year, and which is when diplomatic relations between the two countries have been perhaps at their lowest, because Justin Trudeau made a preposterous allegation. So in a tit-for-tat move, Canada also expelled 6 diplomats to leave the country after it claimed that its police has collected evidence that they were part of an Indian government's campaign of violence. In fact, Justin Trudeau also held a press, and let me read out relevant portions. He said that, as the RCMP commissioner stated earlier, they have clear and compelling evidence that agents of the government of India have engaged in and continue to engage in activities that pose a serious risk to the threat to public safety as well. And yesterday afternoon, in fact, in the evening, India had summoned Canadian charge d'affaires, a Canadian diplomat, Stewart Wheeler, and conveyed that the baseless targeting of the Indian High Commissioner and other diplomats in Canada was unwarranted, was unacceptable. And it also said that the reason why New Delhi is withdrawing its diplomats from Canada is due to the fact that they have no faith in the current Canadian government's commitment to ensure their security. And they strongly dismiss the allegations that Ottawa made that were linking an envoy's investigation to the killing of extremist Hardeep Singh Nijjar. Remember, New Delhi has maintained its stance over and over again that they do not support Justin Trudeau's support of Khalistani or extremist elements in his country, but that has happened over and over again, and which is why diplomatic relations late last night came to an all-time low. Also defending the Indian former ambassador to Japan and Sudan, Sanjay Kumar Verma, who the Canadian side seemed to be targeting, they said that he's a respected career diplomat and the accusations against him are ludicrous and deserve to be treated with contempt. However, a very important point to note is also the fact that in the statement that the MEA, the Ministry of External Affairs, released yesterday, they said that India reserves the right to take further steps in response to the Trudeau government's support for extremism, violence, and separatists against India. So that row is only escalating. We'll have to see the kind of response that MEA gives today after Justin Trudeau's presser yesterday. We'll have to see how MEA really responds to that. But definitely many also whom we have spoken to, many ambassadors have also stated that this is perhaps due to Justin Trudeau drumming up support ahead of elections next year, because he's not really popular. He's also sort of not getting support from Liberal MPs as well in the country.
Well, absolutely. So as of now, we'll just wait wait for a response. But for now, the diplomatic row is definitely escalating. Let's go across and listen into the word then coming in from Canadian Prime Minister Justin Trudeau, as well as the charge d'affaires of Canada, Stewart Wheeler, as well.
We don't want to be having this fight, but obviously the killing of a Canadian on Canadian soil is not something that we can ignore as a country. So every step of the way, we have apprised India of what we know. I've spoken directly with Prime Minister Modi. We have engaged with intelligence counterparts. And unfortunately, every step of the way, both after I made the statement in the House of Commons last September and till now, the response of the Indian government has been to deny, to obfuscate, to attack me personally and the integrity of the Government of Canada and its officials and its police agencies.
The Government of Canada has done what India has long been asking for. Canada has provided credible, irrefutable evidence of ties between agents of the Government of India and a murder of a Canadian citizen on Canadian soil. Now it is time for India to live up to what it said it would do and look into those allegations. It is in the interest of both our countries and the peoples of our countries to get to the bottom of this. Canada stands ready to cooperate with India.
All right, with this, we stay for a short break here. When we come back, we get to the stocks as well as the brokerage reviews. So don't go anywhere. Welcome back. You're watching Market Cafe, and now we get you the action from the FNO space. Ansh is joining by. Ansh, the FI's index positioning looks like same only, but then what we saw was that Nifty could reclaim its 50 DMA mark. But is there some resistance on those levels? Also, tell us what the activity, what we saw in Mag Nifty. Of course, that was clear short covering trend. Give us the data for both.
Right, so not really resistance, but let's talk about index future first. So in index future, we saw some unwinding of position. Starting with FI first. In FI, they have covered around 7,000 long. At the same time, they have also covered 7,000 short. So net to net, we are seeing some addition of around 100 contract, due to which the total long position has inched lower at 86 session low at 35.5% as compared to 36% in its previous session. If we talk about retail position, that's clients, then even here also we are seeing that they have covered their long by 11,000 contract, but on short side they have covered more contract by 13,000, almost 14,000 contract, due to which net to net we are seeing addition of 2,000 contract, due to which the total long addition has been happening from last 10 consecutive session, indicating they have been getting very positive in this market. Now if we talk about Nifty, and if you can see the chart, Nifty was hovering around that 50 DMA from last 5 to 6 sessions. Currently also it's near that 50 DMA only, but in the previous session it has given a slight breakout from that 50 DMA, which is a very positive sign. So until we stay above that 50 DMA, which is around 25,050 level, we can expect some good positivity in the market. Also, if we talk about options, then on option front we are seeing put writing happening at that 25,100 strike and that psychological level of 25,000, indicating good support base around this level. Moving on to Nifty Bank, here also we saw a similar picture only, because Nifty Bank was also hovering around that 50 DMA from last 5-6 sessions, and in previous session we saw a good decisive breakout from that 50 DMA, and that 50 DMA lies around that 51,500. So till Nifty Bank holds above that 51,500 level, we can see good positivity in the market. Also now if we talk about index future, then there we are seeing open interest has declined by around 7%, indicating short covering, which is again a positive sign. So keep an eye on these levels.
Well, absolutely, Ansh. We'll be keeping a very close eye on all of those levels that you've just highlighted for us. But let's also go across to Ria, who's standing by with a list of stocks that we should keep an eye on then.
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up, we have Angel One reporting their Q2 FY25 numbers. Now, the revenue has gone up around 44% on a year-on-year basis, coming in at rupees 1,515 crores. Even the net profit and EBITDA have seen a significant jump, up around 40% and 50% respectively on a year-on-year basis. If you take a look at the margins as well, that has also seen an expansion of around 205 basis points compared to the previous year, coming in at 44.4% in this quarter. They've also added 3 million clients in Q2 of FY25, which is a growth of 15.9% on a sequential basis. And the total client base now stands at 27.5 million, which is a growth of around 11.2% on a QOQ basis. Let's move on though to some pharma stocks that are going to be in focus today. First up is Zydus Life Sciences. Since Zydus and ICMR have initiated the phase 2 proof of concept trials of desidustat in patients with sickle cell disease, which currently has around 20 million patients in the country. We also have Dr. Reddy's in focus, since the company has been named as a defendant in the additional lawsuits tied to the ongoing Revlimid antitrust case. Now, the plaintiffs, including United Healthcare, several insurers and end payer groups as well, have filed amended claims on the 5th of August 2024, and Dr. Reddy's on this front has moved to dismiss all the claims and intends to defend its position vigorously. Let's also talk about Ola Electric, which is going to be in focus, since they have kickstarted the festive season by consolidating the market share to around 34% in October of 2024 in the EV two-wheeler segment. We also have IRCTC in focus today, since the Rail Neer plant at Andhra Pradesh has commenced its commercial production today, and the production capacity of this plant is 72,000 litres per day. And with the commencement of this new plant, the total production capacity of Rail Neer now stands at 18.4 lakh litres per day. Lastly, we also have JSW Infra in focus, since the company has received a letter of intent from the Maharashtra Maritime Board for the development of an all-weather and multi-purpose port in Palghar district of Maharashtra on a public-private partnership basis, and this greenfield project aligns with the company's FY30 growth plan to increase the capacity from 170 MTPA to 400 MTPA. So we're keeping an eye out on all of these stocks today.
Thanks very much, Ria, for all that list of stocks that could be buzzing today. And the much anticipated day is here. South Korean parent Hyundai Motor Company owned Hyundai Motor India is going to create the history in India's capital markets by launching the biggest ever IPO after LIC's 21,000 crore public issue in 2022. Now, the public issue of the country's second largest passenger vehicle maker will open for subscription between October 15th and October 17th. Now, the anchor book details are out. Key names such as BlackRock, CPPIB, Adia, Soggen, Goldman Sachs are to name a few. Now, the price band, remember, has been fixed at between 1865 and 1960 per share. And just ahead of, in fact, this subscription, we did caught up with a whole host of experts to understand their view on it. Listen.
There is no bullishness in this story. It is just a story created by the Indian public. For what reason, I don't know. Because there are 8 or 10 global listed auto companies, and you can see what has happened to them in the last 3 months, 6 months. Every one of them has warned. One of our bigger companies in India is basically 50-60% exposed to the same market. How can it be that 9 out of 9 companies warn? Our company doesn't warn, but says that we will close down the plant because there is too much inventory, but in the long run we are bullish. If nine of those guys in their market are not bullish, why we are bullish about our company, I don't know. Overall, I think that auto is one of the worst sectors to invest in, and I think that the IPO, this new IPO, will most probably on listing will be plus minus par.
I think that this is a huge issue. But, we said the same thing when LIC came, and, that got swallowed. I think this will also get swallowed. It's a good IPO for India, and I think that it will probably take money away from some of the other companies like Maruti and M&M and, Aisha and all the other companies. But I think that at the end of it all, we do need more, and this is good quality paper, and this is a company that's doing well. So why not? And it'll be like Maruti, where Maruti gets half its earnings, more than half its earnings from Maruti India. Hyundai could actually end up being the same place with them.
It is an OFS, let's remember that. Nothing is coming back to the company. But I think the numbers so far have held up pretty well. So I think the product launches, the volumes, the top line growth, the margins have been reasonable enough. And to a certain extent, I think if an investor has a medium-term view, we can subscribe to the IPO. But I've also got an equally important point to mention that Maruti in the same breath, right? The mid-segment cars that they operate out of, the expectation largely is that they should recover their market share over the next few quarters. And there is not much of a valuation gap between Maruti and Hyundai. Maruti gets a sort of a premium valuation for all these factors. So Maruti also should remain on your watch list.
I would like to, recommend and even try to buy Hyundai post-listing. I don't really invest in IPOs. It's a big waste of time, but Hyundai, if you get it at a good price, is something you should buy and hold in your portfolio. This is a sector which should do really, really well going forward. So yeah.
All right, and with that, we're completely out of time on this edition of Market Cafe on ET Now. Thank you so much for tuning in. Don't go anywhere because the market takes all of the action forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.